We really appreciate you joining us today to explore the corporate use of AI in India. My name is Katie Fowler, and I'm the Director of Responsible Business at the Thomson Reuters Foundation. A very warm welcome to you all. We're going to have a strong emphasis on the Indian organisations in our data set today, ahead, of course, of the AI Impact Summit, which is being hosted in Delhi next month. And as part of Thomson Reuters' new first of its kind initiative, the AI Company Data Initiative, or AICDI, as I will continue to refer to it as. For those of you who are not familiar with the AICDI, we are helping businesses to map their AI use, to harness opportunities, and to mitigate operational risk, all the while building a comprehensive global data set to drive responsible corporate AI adoption for the benefit of all. We really appreciate so many of you joining us today. Thank you very, very much. And if we could move to the agenda, please. This is what you can expect today on the call. So we are going to be setting out our findings as to the current state of play, and that is, of course, through the analysis of our initial insights of 1,000 companies and some extra insights from our full analysis of our 3,000 company data set. We're then going to hear from Mohit Agarwal, who is the Director of Strategy and Innovation at SustainoMetric, and he is going to share with us the importance of data quality in the context of the AI revolution. Following that, we're going to hear from Jibu Elias, who is an AI ethicist, researcher, and activist, and he's going to be setting the scene for us with regard to the Indian context around corporate adoption of AI. And then lastly, but by no means least, we're going to have a really meaningful investor perspective brought to you by Chirag Mehta, who is the Chief Investment Officer at Quantum Asset Management Company. We are deeply grateful for our three esteemed speakers today to be sharing their insights with you all. There will be an opportunity for audience Q&A. We will commence that after we've heard from each of our speakers, but I do encourage you to drop any questions that you would like to into the Q&A channel during the proceedings, and I will endeavour to get to them and put them to our speakers before we close the webinar today. So without further ado, I will proceed to share with you some of our insights from the AI Company Data Initiative. Bradley, if we could go to the next slide. Brilliant, thank you. So as many of you know, this year we have collected data on 3,000 companies around the world. This is part of our AI Company Data Initiative. And these companies were selected based on factors like market capitalization, workforce size, and their exposure to human rights and AI-related risks. So at the Thomson Reuters Foundation, we are committed to ensuring that we're informing the ecosystem that's working around data to advance free, fair, and informed societies. And this is a really key way in which we are able to do that through our company and investor network. And for those of you who are less familiar with our process and perhaps don't know us as well as others, we are home to the Workforce Disclosure Initiative, which is a world-leading platform collecting data about companies' workforce throughout their direct operations and supply chain. And it is on the back of that infrastructure that we have created this new AI Company Data Initiative. So we analyse publicly disclosed documents such as annual reports, sustainability reports, and technology or policy statements, and then we map this information to our AICDI survey to generate insights. And the AICDI survey doesn't have a sector lens, so it can be applicable to all organisations, any industry, and technically any size. Although in this case, of course, because we are analysing publicly disclosed documents, we are focused on public companies at this time. And the AICDI survey is a survey that has been created and really founded on the UNESCO recommendations on the ethics of AI. And what we have been focused on doing is really creating a a grounding framework for companies to use in order to help them understand what responsible AI and ethical AI practice can look like for their business. The UNESCO recommendation on the ethics of AI have been ratified by 193 countries around the world. So it is the most truly global framework. And in the absence of specific AI regulation, a lot of companies are very keen to be able to use an established framework to benchmark their progress around their responsible AI practice. So that's exactly what the AICDI survey hopes to offer. So firstly, just to present some scene setting statistics for the first 1,000 companies that we have collected data on all over the world. If we break the data down by sector, quite an interesting picture emerges. So regardless of industry, companies actually follow quite a strikingly similar pattern, showing the same strengths and weaknesses when it comes to responsible AI. And many of you won't be surprised by this, of course. And if you take a look at the chart on your screen currently, you'll notice that the lines are move almost in parallel across the sectors. So all sectors perform better on areas that are easier to standardize, as you might imagine, such as maintaining model registries, promoting internal AI ethics awareness, and evaluating training data. But the lines dip consistently on more complex, operationally heavy areas like bias prevention, privacy, deployment assessments, third-party data governance, and workforce reskilling. And this tells us something really important, that companies are so much stronger on awareness than actually implementing strategies to manage AI responsibility, and arguably because no one is really asking them to. So when we apply a sector lens, the pattern holds, but with just some variation. And those are that the information technology and financial sectors lead across most categories, while energy, materials and utilities lag behind, particularly on registries and ethics awareness, even though environmental considerations are, of course, highly relevant to these sectors. So if we move on to the next slide, across the 482 companies that do have an AI strategy, so that's 48% of those first 1,000 companies that we have analysed, top level governance appears really reasonably strong. And that's to say that 76% of companies report management level oversight, and 71% of companies actually have responsible AI guidelines in place. But when we look at the implementation referenced, the picture changes. So only 41% make those policies easily accessible or require employee acknowledgement, and only 32% address societal impacts beyond the end user. So in short, strategic oversight is fairly widespread, but day-to-day execution, such as employee accessibility, reporting, and operational integration, is much thinner. So dedicated resourcing also varies significantly by region and sector. Regionally, the differences are pretty stark. Only 25.5% of companies in the Americas support dedicated responsible AI roles or teams, compared with 46.1% in EMEA and 28.4% in APAC. And of course, there are huge connotations to regional regulatory frameworks that exist in those regions, of course, as well. And this points, of course, to a clear technology versus responsibility gap in Americas. While many firms lead in AI development and innovation, far fewer have formal governance structures, dedicated resources, or processes to assess broader societal impacts. External standards are, of course, starting to raise the bar. The EU AI Act introducing binding requirements for transparency, documentation and risk assessment, especially for high-risk systems. And in contrast, of course, the US NIST AI risk management framework remains voluntary, but it does offer a structured approach to roles, documentation and measurement across the AI cycle. So looking through a sector lens, the pattern is consistent. Information technology companies lead on implementation, with 60% reporting dedicated responsible AI resources. And at the other end of the spectrum, energy and materials lag significantly, with only 20% investing in such roles, despite that high relevance of environmental and social considerations in these sectors. Moving again to our next slide. The next lens that we're looking at is really through operational transparency and environmental sustainability, two gaps where there are striking differences across regions and sectors. Now, if you're looking at the chart, you'll notice how the lines dip sharply on categories like AI model registries and environmental impact, and these were consistently among the weakest points for companies. And just to put some numbers on it, out of the 1,000 companies in this early insights report, only about 30 of those companies report to actually having a formal AI model registry in place. And that is a single place to track training, data testing, testing approaches, and life cycle documentation. So arguably a pretty basic rule to operationalize AI adoption, and something that is very, very neglected amongst the first 1,000 companies that we analysed. A similarly small, again, around 30, report considering the energy use or carbon footprint of model training and inference. Why does this matter? And that is really because, well, many, many different reasons, but because the EU AI Act, companies deploying high-risk AI systems are expected to provide clear documentation on capabilities, limitations, and risks, so that outputs can be interpreted appropriately. Model registries are exactly the kind of tool that makes this possible. And similarly, the NIST AI Risk Management Framework in the US emphasizes transparency and documentation as core to building trustworthy AI. Of course, on the environmental side, not least because environmental sustainability reporting is so mainstream, it's really striking that it hasn't really caught on when it comes to AI adoption. And the IEA estimates that global data center electricity consumption could double to 945 terawatts by 2030, with AI as the major driver. And that puts a spotlight on measurement and efficiency at the model and workload level. So for many organisations, building basic energy and carbon tracking for AI is a very, very practical and arguably the most simple first step, one that aligns both to stakeholder and shareholder expectations, and of course these emerging regulatory trends. And then just to put the spotlight on India, of course, and that is the focus of our conversation today. We have bias prevention leadership, with just 10% of 3,000 companies we researched processing to avoid unfair bias, and only 4% of Indian companies in that group had them, highlighting a major gap in bias mitigation outside the responder group. When it comes to policy and framework adoption, only 13% of 3,000 companies and 4% of Indian companies adhere to AI ethical frameworks, or indeed, that's what we found from our public data. And that's indicating minimal adoption of voluntary standards among non-participating organisations, especially in India. And then when it comes to the data governance divide, 46% and 30% for the 3,000 companies have data privacy policies and third-party data sharing policies, respectively, and just 30% and 21% for Indian companies. So it does show quite a significant lag in Indian company behaviour and practice. And then finally, around diversity and the diversity and inclusion challenge, only 1.5% of 3,000 companies that we analysed and 0 of Indian companies actually proclaimed to ensure diverse AI development teams, revealing a very critical gap in inclusive AI development practices. So if nothing else, I hope that summary of our data really gives you some food for thought, and indeed perhaps inspires some questions for our speakers who are now up next. And it gives me a lot of great pleasure to introduce our speakers as we move to this portion of the webinar. And first, I'm going to introduce Mohit Agarwal, and he is going to talk to us about the importance of data quality. Mohit is the Director of Strategy and Innovation at SustainoMetric with over 15 years' experience in sustainability consulting and ESG research. Mohit leads organizational strategy, new service development, and technology-driven initiatives, and his background includes building and managing cross-country research teams for global ratings agencies, indices, and asset managers. So Mohit, thank you so much for your time today. We're really, really grateful and pleased to see you, and I'm delighted to hand over to you. If we could get you onto a spotlight, fantastic. We can see you now. Over to you, Mohit.
Thank you, Katie, for inviting me to today's session. And thank you for sharing the findings from the AICDI survey. They resonate so well with what I'm going to talk about. Some of the findings are so relevant, I feel much more confident now. Good afternoon, everyone. Good morning, good afternoon, everyone. I think today's topic, exploring corporate use of AI in India, is a highly relevant topic. AI has been a buzzword for last couple of years, and I don't think there could have been a more appropriate time to discuss how it is actively used and the underlying challenges. Over the next 8 to 10 minutes, I would like to share my thoughts across three key areas, drawing parallel between ESG and AI, common corporate gaps that we continue to see in practice, and what good really looks like. Starting off with the first one, drawing parallels between ESG and AI. AI in today's world reminds me of ESG reporting in the early days of my ESG journey. Amongst the key challenges, I would say the first challenge was the data gap. I'm sure a lot of you would be able to resonate well with this. I started off as an ESG analyst almost 2 decades back, and we often felt the reporting was inconsistent, unstructured, and fragmented. The disclosures weren't always comparable or decision useful. And of course, the comparison is with what we see today versus reporting almost 2 decades back. The second challenge was greenwashing, or let's just say the trust gap. Just as investors once doubted unaudited ESG claims, they now question AI decisions, which seem more like a black box. I mean, no one knows how a decision is being arrived at. When you ask any queries, when you do any prompting, I mean, AI throws some responses, but majority don't even understand the underlying logic behind it. And lastly, the evolving regulation. For instance, in India, SEBI's BRSR code now requires mandatory reasonable assurance for ESG data. I'm sure for ESG, the regulations have evolved over time, but soon AI generated outcomes too will need to be traceable and auditable. We are seeing a very similar pattern with AI across multiple use cases. Organizations often don't have clarity on where AI is being used, for what purpose, and what data it relies on. And that is why I strongly believe AI governance first fails at the data layer and not at the model layer. With this, let's move on to the next area, common corporate gaps we see in practice. When we look at how companies are adopting AI in practice, we see a few recurring gaps. And honestly, they're very similar to what we have seen in ESG data projects over the years. The first gap is what I call policy versus practice. Companies have an AI ethics policy, but no technical controls to enforce it. For example, policies may talk about fairness, transparency, and privacy, but in practice, there may be no consistent processes for validating training data, monitoring bias, or managing incidents when something goes wrong. And this resonates so well with what Katie just shared, right? Majority of the companies either are missing on underlying training data, or they do not have the model registries for AI. So the organization has the right intent, but the operating mechanisms are missing. The second gap is what I would call the value chain blind spot, and this is especially relevant in case of India. Under SEBI's recent ruling, companies must report on their value chain related risk and impacts. Most firms struggle to track their direct AI usage, let alone the AI risk arising from tools and services they procure from external vendors. So AI risk isn't just from what company builds internally, it also lies in what you procure externally from your vendors, CRM co-pilots, or third-party product. I mean, AI is being integrated in almost everything that you are procuring from outside today. In many cases, AI is effectively running in the background and companies don't have a clear inventory of where it exists, what data it touches, or what decisions it influences. And this becomes a serious governance issue because you can't manage what you can't map. The third gap that we see is human in the loop deficiency. Automation is often treated as a replacement for experts. In reality, AI in high stakes ESG research often requires a human in the loop to ensure the last mile of accuracy. Even in the ESG research that we conduct today, we operate with very high levels of quality SLAs, which is difficult to achieve solely based on AI outputs. For example, in ESG and compliance work, speed is valuable, but accuracy is non-negotiable. This is an investment grade data on which decisions are being based, right? So the right models is not just full automation, it is automation plus expert review, especially in edge cases and high impact decisions. So if these are the gaps, how do we fix these? I mean, it very naturally comes to everyone's mind that, I mean, most of you would be able to resonate well with these gaps, but what are the next steps and how do we fix this? And that brings me to what good looks like in practice and how do we move forward. I'll share three practical principles that have worked across sectors and maturity levels. The first principle is audit before you automate. Before layering AI into business processes, the user needs to audit the underlying data. Just simply ask some basic questions. Is it clean? Is it biased? What time period it refers to? Because if the input is broken, only AI only breaks it faster and at a scale. This is why strong AI governance starts with data governance. The model is only as good as the underlying data. The second principle is adopt explainable AI. Companies need to move away from black box decisions, especially in high impact use cases. Like I mentioned, people often fail to understand how AI has arrived at a specific decision. Whether it is credit scoring in BFSI, fraud detection, hiring and screening, or even emissions tracking, your team should be able to explain why AI made a specific decision. This resonates so well in several cases. I have seen teams often struggling with getting their prompts right rather than understanding how AI interprets it. In simple words, if you can't explain it, you can't govern it. The third principle is operationalized ownership. AI governance shouldn't just sit with the CTO or the data science team, since it touches multiple aspects of the business. What works well in practice is creating cross functional AI review boards. I think this is something which is well recognized from the findings of AICDI that Katie just shared. I think 76% of the companies already recognize the importance of AI governance and they're already taking care of it in some form or the other. Lastly, from AICDI survey, I see this area should be treated not as a mere compliance, but instead of thinking as a need to fill a survey, I think the organization should look at it like this helps us benchmark our maturity, identify gaps, and prioritize what to fix first. As I hand over to our next speaker, Jibu, who will dive deeper into today's topic and talk more about the Indian context, I'll leave you with this thought. In the next phase, the winners won't be the companies that adopt AI fastest. They will be the ones that can prove they are using it more responsibly. Over to you, Jibu. Thanks, everyone.
Mohit, thank you so much. And I'm going to very briefly introduce Jibu before he launches into his speaking slot. Jibu, of course, is an AI ethicist researcher, and he's very committed to building a more inclusive AI ecosystem in India. His work has been focusing on addressing the digital divide and shaping equitable AI governance frameworks, ensuring emerging economies benefit all communities, which is really, really critical. And Jibu's advocacy and research continues to influence national conversations on responsible and accessible AI. We're very, very pleased that you could join us today, Jibu. Over to you.
Thank you, Katie. Thank you, Katie, and thank you, Mohit, for a really good speech. I think giving the Indian context today has become more interesting considering that we just signed a trade deal between EU and which will have a larger implication on how the AI ecosystem, India's AI ecosystem will thrive on, which I will get into that into the conversation. So I want to focus on what India's AI reality is like, right? It's on scaling trust and not just technology. So when we talk about artificial intelligence in India today, the narrative is always swinging between two extremes, right? One side, there is this enormous optimism. We see that in the larger industry, in the government as well, that India as the next AI global powerhouse, especially considering the talent we have, the startups that have been doing phenomenal job, the scale and the ambition, and all other things. On the other side, there is anxiety, there is skepticism about the questions on regulation, risk, misuse, and whether India might miss the moment or get trapped between the larger AI race happening between US and China. So the reality, as usual, is somewhere in between these two extremes. Now, let me be very clear. India is not struggling with AI innovation, but India is struggling with AI translation from pilots to trusted revenue generating large scale deployment. So that I believe is the real India AI story today. Now, let's take a step back, right? And where India really stands on AI. And then let's be very clear about where we actually are. So India has all the visible ingredients of a strong AI ecosystem. We have deep technical talent, a vibrant startup scene, global technology companies investing heavily. Look at the number of upcoming data center projects and many more. And one of the world's largest IT and service ecosystems. Now, AI is being experimented across sectors, from banking, healthcare, logistics, retail, agriculture, education, and the government-related public sector. But when you look closely, most of AI deployments in India like fall into three larger categories, right? First will be like internal efficiency, focusing more on automation. Second is analytics, where you will be looking for some sort of decision support. And third is service augmentation, not autonomous systems alone. So very few India-built systems are trusted to run mission critical process end to end, and especially in a public facing context. So while the volume of AI activity is high, the depth of adoption remains shallow. And this large gap between experimentation and trust is where most AI pilots or most AI initiative kind of stalls. Now, where is India is genuinely ahead, right? And and in fact, India is ahead in a very several structurally important ways, right? Like first of all, look at the digital public infrastructure. If there are any Indians in the audience, I mean, I can say some similar names, familiar names. I don't have to explain them, but for the larger context, the DPIs such as Aadhaar, UPI, DigiLocker, and the ONDC, these platforms have shown that India can deploy technology at large, population scale, right? Which very few countries have proven to have this capacity. And secondly, applied, you know, AI in messy environments, right? We keep saying that it's almost impossible to have the self-driving car technology succeeding in India because how erratic the drivers are in India and how chaotic the roads are. So Indian engineers are especially, exceptionally good at building systems that work despite noisy data, incomplete records or real world constraints. That's a genuine competitive advantage. In fact, I remember a few years back, I was part of the organizing team for organizing the Race 2020 AI Summit, which is an online summit where the Honorable Prime Minister said India can become the garage for building AI systems across the world. Because we had to deal with this kind of diversity, this kind of challenges, right? How do I say, resource constraints and all these challenges to build our tools. And if we can do that, then those tools can work in any ecosystem, any landscapes. Now, coming to the third is the service ecosystem. As I mentioned, we have IT sector, which understand process, compliances, audits, scale, exactly what the kind of muscle AI needs to move beyond demos. So the problem is not capacity or innovation. The problem India is having is conversion. Especially when it comes to procurement and trust, right? So in India, AI rarely fails because of technology, but it fails because it fails institutionally. Large enterprise and public buyers hesitate because, first of all, they don't trust the black box system, right? And they fear reputation damage, and they don't know who is accountable when something goes wrong, right? Now, Mohit spoke about data, right? And India has a vast amount of data, but it's fragmented, often poor in quality, and legally and ethically ambiguous in most times. So the data protection laws, was help to clarify these issues, but compliance capacity is uneven, and especially when it comes to startups. And so then there's the whole question of pricing and business models. So Indian buyers, whatever it is very extremely price sensitive. So AI RO at this point is hard to demonstrate as it's very early. And many startups get trapped into this, delivering proof of concept on the other hand, that never converts into contract at this current market reality. So yeah, the market matters. Now, coming to regulation, uh, India is doing something distinctive. We are not copying EU's AI Act and not taking a hands-off approach such as US. Instead, we wanted to focus on as many of the AI or technology leaders of the government and the public sector in India says, we want to focus on a pro-innovation regulatory approach, right? So India is pursuing a principle first, sector-led governance model. And so core principles such as fairness, accountability, safety, explainability, and then the sector regulators such as banking, finance, insurance. And then there's an emphasis on guidance, oversight and how capacity building rather than blanket bans. So this reflects inside that, like in a country as large and diverse as India, a rigid AI law would definitely break innovation, but absence of governance would break trust. So we are trying to find the balance with both. So that's why oversight matters more in India than elsewhere, right? So AI errors don't affect thousands, especially in Indian context, they affect millions. So when AI used in cases like credit scoring or welfare delivery or health triage, education, hiring, importantly, policing, right? That failure scale is fast and often, it often scales fast and very quietly. So it will take time to notice that. So in India, a failure is not just a technical issue, but it becomes a social event overall. So oversight is not just about slowing development, it's about how we can prevent these silent harms, preserving institutional trust, and making AI usable in a regulated, uh, high impact environment. So I will just move to the market access part of my conversations because so there's a lot of focus on today on market access programs for AI startups. Recently, Google just announced another one, but they help, but they don't solve the core problem, right? The real constraints, as I mentioned, is enterprise trust, compliance readiness, and integration with legacy systems. So confidence in long-term accountability. Without this, access does not always convert to revenue. And now I want to mention briefly about the EU-India trade agreement that signed uh, today, actually. So so it has an AI adjacent provision regarding digital trade chapter. Secondly, it's explicit AI corporation commitment were announced alongside this rule as well. So for companies and most operational AI, the implication of this packages are threefold. So digital trade rules, and the trusted data governance and cross-border data flow track, and the formal AI cooperation that rails between India and EU institutions. So together, these signal that AI governance itself is no longer a purely domestic issue for Indian firms going forward. It is becoming embedded in trade, investment, and market access architecture. So coming to where ESG and AI governance converge, right, is so AI create, as we know, environmental risk in the case of use of energy, compute, and other resources, social risks such as bias, exclusion, and other silent harms, governance risks through opacity and unclear accountability. So investors are like starting to see this, right? AI governance gaps translate into sort of regulatory exposure or reputational damage, and importantly, operational fragility, right? So AI no longer is a side issue for investors and large enterprises. It's a part of risk profile as well for the firm. Now, I wanted to take a moment to mention where AICDI fits into this larger Indian story, right? It's not about AICDI is not about like it's about making this invisible risk visible, right? It helps companies to understand their AI footprint, signal seriousness to investors and buyers, and of course address governance and social impact and environmental costs earlier on. So in India, credibility is currency. And if AICDI can help companies build this credibility before regulation or failures forces this issue, that'll be like incredible. Now, the question here is, so the real question for India is not can we build AI? We definitely can. But the real question is, can we build AI that institutions, market, and importantly, citizens trust at scale? India's AI future will be decided less by how fast we build models and more by how well we build trust around them. So thank you very much. I will stop here.
Thank you so much, Jibu. That was a brilliant lead into hearing from Chirag. I think it's really important that we're looking at AI governance not on its own as a sort of totally separate issue, but also as an increasingly interlocking issue with, of course, broader ESG issues and metrics. And Chirag, I'm very, very pleased that you could join us today. And it's incredibly important. We have heard such a compelling case from our previous two speakers about the importance of AI governance, the impact, of course, that AI has on our workforce and on our wider society, and all of the different safeguards that we could put in place. But to hear now also from you to bring an investor perspective will be really, really interesting to our attendees of this webinar. So Chirag, just to formally introduce you, you are Chief Investment Officer at Quantum Asset Management Company with 2 decades of experience across asset allocation, sustainable investing, equities, and alternative strategies. And you, of course, have been instrumental in shaping Quantum's investment philosophy since about 2006. Managing India's pioneering ESG best-in-class strategy fund. And you are a leading voice, of course, in advancing responsible investment practices in the Indian market. So very, very pleased to hear from you today, and over to you.
Thank you, Katie, and thank you everyone for joining us today. I think both the speakers, Jibu and Mohit, threw a lot of important points in terms of like AI is here to stay, and at the same time, governance of AI is extremely important. For us as an investor, it seems very similar to when we were looking at data regulations surrounding data or use of data increasing, or be it the early ESG days when there were disclosures starting to come from companies, and we were trying to make sense of how do we safeguard against these many risks. This was about 10 years back when we started our journey around that time. So from a investor perspective, right, when we look at this, we understand that companies don't operate in a vacuum. When we analyze companies, there is an overlay of a sector, of an economy, of government, of policy making around where the companies operate. And hence, to understand that macro landscape becomes extremely important. So if you look at the Stanford AI Index, India ranks 4th, and it sounds great, right? Ranking 4th amongst all peer countries out there. But if you look into details of the score, India's score stands at 25.55. And if you were to look at, the leading countries, like, for example, US, scores at 70, China is at 40. So at 25, though, leads to the 4th ranking, but stands far lower than what the highest score is, or even the other countries that rank above us. So there's a big gap between India versus the global countries out there. And where does this shortfall come from? So if you look at the readiness of India when it comes to AI readiness, is at 0.36 versus US, which is the highest at 5.71. Or look at the infrastructure that India has when it comes to adoption of AI, is at 0.6 versus 17 for US and 10 for China. So overall, this points to the fact that there can be AI operational risk when you try to adopt that, because there are gaps surrounding governance and safety. If you look at various surveys where Indian regulators and actuaries have flagged various risks, and these risks were surrounding cybersecurity, manipulation risk, or disruptive tech volatility. So there are certainly many risks that India needs to look at when it comes to adoption of AI. And I think it all starts with governance, like what Jibu pointed out. So when it comes to global AI readiness overall, so there is the limited government institutional capability as compared to other countries which have ranked higher than what India is. There is gap in data infrastructure. We have relatively weaker compute capacity in India, and those challenges are only increasing over time, which leads to our readiness being lower as compared to our counterparts. When it comes to regulation, which is the next layer, uh, I think EU with the EU AI Act has led in terms of, usually EU leads in terms of regulations, and probably this is the most comprehensive AI law that prevails today in the world. So India also has leapfrog. We have responsible AI guidelines with us, which looks at fairness and bias controls, which look at transparency and governance, which looks at testing and monitoring, cyber security and deepfake issues. So overall, we do our thinking on those lines. But I think the sooner we implement a policy and a regulation and enforce it will make all the difference when it comes to the policy and regulation, because this leads to the confidence of investors. This leads to the building of infrastructure and therefore reduce that risk that we see in India today. So overall, I think that the outcome of all these three, the government, the policy, and the infrastructure, leads to the outcome. And outcome, if you were to measure from a risk perspective, it's about the safety incidents. So if you look at the safety incidents globally, have been increasingly significantly. If you look at year-on-year jump, it's about 56% increase in AI incidents globally. India is not immune to that. Though the number is low in India, uh, if you look at deepfake fraud is surging in India, because there have been so many instances of deepfake fraud at the corporate level, that you need to ensure that corporates have a well defined policy of undertaking operational transactions. Otherwise, they will have a mishap at any point in time. Industrial AI accidents. There was a company in Chakan in India where there was a fatality that occurred because of a mishap where they deployed AI, but it was not foolproof. And that led to one fatality in that company because there was a worker working on that plant and the sensors didn't work well, and therefore that fatality took place, unfortunately. So it needs to see that these incidents do not occur, and that will only happen if there is proper testing, proper monitoring, and therefore avoiding these mishaps. AI use in financial markets, for example, is an emerging concern. There's algorithmic manipulation happening, and hence there has to be safeguards. We have seen SEBI guidelines on that emerge, and probably it's been there is reporting, there is checking, monitoring, etc., that is in the obligation of the financial intermediary. So I think we are leapfrogging on those lines, but it has to be much faster. And the fact that Indian incidents are lower today is only because AI penetration is much lower and not the risk. So from that standpoint, I think we need to look at adopting these things fast, because as we accelerate the pace of AI adoption, there is likelihood of far more accidents that can occur. So from our vantage point, how are we assessing the AI risk when it comes to our companies, like how we used to do in the how we assess companies on integrity or governance? How do we assess companies on the AI risk? So we think that strong governance is the single best predictor of reduced AI downside risk. AI is a material risk across many areas like cybersecurity, competition, regulation, ethics. And we want to here also concentrate on the materiality of the risk. So how do we determine the materiality of the AI risk to a company? We ask certain questions to figure that out. Is AI core to the product or merely a workflow tool? Which business units in a company rely on AI, and are they mission critical? Does the company deploy generative AI, which has elevated safety issues? The IP and hallucination risk are increasing. So overall, I think we need to look at the materiality and how strong governance practices are for those companies to avoid those risks. So what do we look at when we look at company to understand if they have great governance or not? The checklist that we have with us, looks at various things. For example, does the company document AI assumptions, limitations, and intended outcomes? Though disclosures on these areas are very, very limited, I think something like adoption of AICDI, we benefited from Workflows Disclosure Initiative when companies started disclosing to WDI. We benefited because there was a lot of information, quantitative and qualitative, available for us as investors to look at those risks in detail, and therefore use it in our assessment and use it in our engagement with companies to ensure that risk over a period of time is well understood and reduces over time. So here we also look at, does a company follow a life cycle view of the AI adoption or not? From data sourcing to model training to deployment to monitoring to retirement. And we think that there are various categories, and for each company, each sector, there'll be different amount of risk or different risk in a different quantified manner that will impact that company, right from security and privacy risk, operational and reliability risk, regulatory and compliance, because we think that over a period of time, regulatory and compliance risk will certainly increase for these companies, and therefore how sooner the companies ahead of the curve, based on their regulatory and compliance checklist, I think that will help the companies to counter competition and adopt AI for their advantage, as opposed to catching up with regulations when they emerge. There is also risk of ethical and fairness risk, because if there is an unethical use of AI, and if they are having biases or unfair outcomes, probably that could lead to a big backlash on the company, and there could be a reputational risk for the company and for us and as investors into those companies. So I think there are many risks that we see on the horizon when it comes to AI adoption. And I think it is the onus on the company to showcase that they have strong governance, strong data management, and therefore lower AI risk. So all encompassing, I think Jibu also touched upon, or Mohit also touched upon, human in the loop. So I think we think that AI adoption should also come with its checks and balances in terms of whether they are looking at or they're undermining critical human judgment. And if so, then there can be some repercussions that can be adverse for that company. So from that standpoint, are they looking at, are high-stake decisions being reviewed by humans, or does the company train employees when it comes to safe AI usage? So all that becomes very, very critical, and I'm sure they are part of the AICDI survey, which brings this information out. So before, I think if some company is kind of trying to adopt AI, I think they have to look at various regulations. They need to start disclosing a lot of data, being transparent about how they are using AI. I don't think that undermines that competitive ability, but I think it leads to the company getting the trust of various stakeholders, including investors, to be able to say that they are using AI to their benefit, and they are using AI in a responsible way, so that that will lead to a differentiation when it comes to that company attracting investors' attention. So overall, I think as investors, we should quantify and look at qualitative aspects of it. Expected cost of AI compliance, risk of fines, litigation, impact on margins of that company when it comes to automation versus failure risk. And on a qualitative perspective, it helps companies or us to assess whether there is leadership competence in AI, culture of responsible innovation, and reputational robustness. Uh, and this data that company publishes will help us engage and understand the companies better in terms of the safeguards that the company has, and therefore helps us invest into those kind of companies, understanding those risk aspects and not just looking at the opportunities in isolation. So I think at Quantum, we see AI as a powerful enabler, but only when governance, transparency, and accountability keep pace with adoption. So I think it's all boils down to the long-term value that the company is trying to create with AI, and how well AI is governed is the key to success. So with that, I'll stop here and over back to you, Katie, and happy to answer any questions that you may have.
Thank you very much, Chirag. That was indeed very insightful and a completely different perspective from our previous two speakers as well, although you're all very aligned in terms of the importance of this topic and the imperative that we have really to be looking at AI governance very, very seriously, because there is a lot at stake, particularly in the Indian market. And as I think Jibu said, it's not affecting hundreds of people, it's affecting millions of people. I think that really struck a chord with me. There are a couple of questions in the chat, and I'm aware of time. We only have a few more minutes. So if anyone has any other questions that they'd like to put to our speakers, please do that in the next few minutes. Jibu, I'd like to come back to you, if possible, with one of the questions that we have. While using AI for data extraction, what key governance considerations should teams keep in mind? And if you can share any practical examples from your experience, such as, for example, how model parameters or versions are stored. Do you think that you might be able to answer that one?
I think this question is for Mohit, if I'm correct. I think the questioner might have mistook me and Mohit.
Sure.
No, I'm happy to take this one. So with respect to AI data extraction, what key governance considerations should the teams keep in mind? I think one of the key considerations is ensuring operationalizing governance, where all the key stakeholders who are the end consumers, they should be kept in mind and including them. So one of the aspects that I raised was putting together across departments AI review team, which includes your leadership, the sales team, the business teams, legal and compliance teams, and sustainability teams wherever relevant. Just creating a review board to ensure that people are aware of where AI is being integrated, what are the decisions that you are making via AI, and how they are consumed in the end. So that is one. Second is with respect to, let's say, how you model parameters or versions. I think you're depending on whether you are using off-the-shelf AI tools or you are creating something in-house, it is important to understand what has changed between these model versions, right? For instance, one of the points that I raised in my script was AI decisions are mostly black box, and what users do at the end of the day is just refining their prompts to get the right answers, right? Believing that these prompts would fit every situation. Now, it is really important to understand how AI is making those decisions rather than just focusing on refining the prompts, right? And that is where what models you are using and what has changed between the previous model and the current model, that is really important to understand that. So I'm not sure if these answer your queries, but when particularly when we talk about practical examples, I mean, I would rather pick up the use case for ESG. I mean, the data is quite unstructured. The regulations are still shaping up. And when we talk about using AI for extracting or analyzing ESG information or the CSR reports, it is really important to understand how this data is being consumed. In a lot of cases, Chirag mentioned this data is being used for investment grade decision making, right? So, I mean, it is really important in that case to ensure and understand maintaining the proper AI model repositories and ensure that all your stakeholders are involved and they understand how AI is being used for decision making.
Thank you so much for that answer. Chirag, I will come to you with a final question before we have to close. I'm aware we're over time already, but a question from the audience was whether you're using ESG data that's generated by AI in your portfolio, and indeed what your expectations are from the data provider.
No, we are not using as yet the AI generated data, but we have been experimenting in terms of extracting a lot of data using AI. Although I think it requires a lot of checks and balances. And also the qualitative evaluation of all that data is very, very critical when it taking an ESG investment decision. So I think we rely on our analyst teams to kind of look at it qualitatively and therefore, see whether the company passes our muster or how it ranks qualitatively vis-a-vis other companies in the peer group or be it global companies. And therefore, as I said, it can be a great enabler for us to reduce our work to get that raw data. But I think we'll continue to analyze that company qualitatively by the analyst team to arrive at final decision making. So I think, yes, two parts to it. One is it enables us, reduces our work to concentrate on the qualitative factors more and engage with companies more, as opposed to trying to extract a lot of data, which is available easily with the help of AI.
Fantastic. Thank you so much for being so clear about that. I'm going to wrap this webinar up. We've reached our time limit, and all that's left really for me to do is to thank our esteemed panelists, speakers. Very, very grateful for your time, an enormous depth of insight, and I'm sure all of the participants of the webinar would agree with me. So thank you very, very much, Chirag, Mohit, and Jibu, sorry. And then finally, the AICDI is an ongoing initiative. If you would like to get in touch with us, we'd be very, very grateful to hear from you. You can stay connected by visiting our website, aicdi.trust.org, or indeed you can email Rosie McKenzie, who is our Senior Company Engagement Manager, and she would be delighted to direct your call, or you can send an email to aicdi@thomsonreuters.com. Thank you very much to everyone for joining, and have a great evening. Experiencing a few technical difficulties with our PowerPoint, and we are now good to go.